Okay, what is going on, CYPRX YouTubers? Welcome back to the CYPRX YouTube page. As always, if you guys are interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, I'm going to teach you all how to trade in tandem with the higher time frame. As you guys know, all right, the best direction to trade in the market if you're an intraday trader or a scalper is to trade in tandem with what the higher time frame is telling you. Now, a lot of people will get manipulated by lower time frame price action in between sessions, and they will trade on the wrong side of the market and find themselves getting liquidated. So what do I mean by that? We can see here that on Bitcoin, right, this is on the daily chart. We can see that there were minor sell positions or retracements and then massive bullish rallies to the upside. There were minor retracements here and then massive impulses back to the upside. And then again, same thing, retracement here and then massive impulses back to the upside. How can you avoid getting caught on the wrong side of the market? So let's just say, for example, we're looking to trade, right? We missed all of this trading price action and we're looking to trade somewhere in this range on the next trading day. How can we determine, right, what directional bias the market is in? All right, well, we can utilize logic in the form of price action structure based off of the methodology that uptrend is defined as what? The market showing us a willingness to go higher by grabbing liquidity from the downside in the form of internal liquidity, somewhere in this range, right? Grabbing internal liquidity and then showing us a willingness to go higher, creating again internal liquidity, grabbing that internal liquidity, and then showing us a willingness to go higher. And we can look for this fractal price action by utilizing the daily highs and the lows, and utilizing some simple drawing tools on our TradingView platform. So in this video breakdown, guys, I'm going to show you all how it is that I personally view the charts from a daily perspective, not to get caught on the wrong side of the market. If you guys don't know by now, you should be trading in tandem with the higher time frame if you are a scalper intraday trader, all right? Because the higher time frame takes precedence and the market respects more so what the higher time frame is doing over the fractal nature of things. So here I have some drawings on the chart for you guys, all right? What we're going to be focusing on is the wick lows of the daily candlestick reversal points, all right, if that makes sense. So what we're going to be looking for is a swing low on the daily, the lowest point in price action in the form of a candlestick wick of that daily candlestick market low, and we're going to mark that and annotate that with a black line, all right? That line has to lead to a market breaking structure on the daily price action. And what we're going to be doing is we're going to be looking back at the past pretty much week's worth of price action. So if we're looking to operate somewhere in this vicinity over to the right-hand side, all right, we missed all this price action. We're going to backtrack the last week's worth of price action. So we're going to be looking at 1, 2, 3, 4, 5, 6, 7 days on the daily candlestick chart to annotate what directional bias of the market currently is. And then we're also going to utilize some left-hand price action structure to determine liquidity points in the market to potentially track target areas if the market is going to continue bullish, right? Because we know in a bullish environment, where is the market going to be attempting to push price action into? Liquidity in the form of buy stops above previous highs and over leveraged sell positions above these areas. All right. So if we're looking to see a bullish continuation on Bitcoin, and again, this is just hypothetical, just teaching you guys, showing you how you can trade in tandem with the higher time frame, what we're going to be looking for is a potential pullback into a discounted region to hop in on the moving trend, or the what? The definition of an uptrend: higher high, higher low, higher high, higher low formation, looking to buy at discounted prices to come and clear out liquidity in the market. All right, basing all of our trading off of logic. That's what you guys need to do and understand. So I'm going to completely delete all the drawings and we're going to start fresh tracking price action. We're going to utilize two drawing tools on our charts, which is going to be the horizontal ray and the trend line tool. All right, so backtracking the last 7 days on the daily chart, we can clearly see here that the market created daily lows and then rallied higher, breaking structure. Right here, if we're backtracking 1, 2, 3, 4, 5, 6, 7 days worth of price action, that's all you realistically need to determine a daily trending market, or which directional bias the market is trending on the daily time frame. Okay, so we're going to take our horizontal ray, and you can do this on any asset that you want to trade, all right? Whether that be gold, commodity, indices, foreign exchange, cryptocurrencies, it doesn't matter. But we're going to take our horizontal ray from the daily candlestick wick low, all right? And then we're going to see that that lines up with the psychological level or not. Yes, it does, which is around the 8860 psychological level, or we can just round that off to the 38863.50 level. So let's just go ahead and we'll change that 0.50 level to make that a psychological level. Okay, beautiful. All right, then we see the market rally and create a new high. So in comparison to the previous swing high on the daily chart, which will be where? Right here in price action, we see the market pull back, create a higher low, and create a higher high formation. That was a little bit sloppy. All right, let me use the drawing tool right here. So we see the market create a high, pull back, create a higher low, and create a new market swing high on the daily chart. Okay, so that is how we can determine that this is a valid higher low on the daily chart. Just going back 1, 2, 3, 4, 5, 6, 7 days worth of price action to determine the higher time frame trend. Now let's start tracking price action. What can we see? We see that this daily candlestick low, what was it? It was an area of internal liquidity. How? Because we see the market created a low of internal liquidity. Okay, and this is where we're going to use our trend line tool. We see that the market created a low, so we're going to take from the wick low and extend that over to this daily candlestick low. The market violated this low and then showed us a willingness to grab liquidity and go higher. How can we determine that that did that, or that price action did that? Well, you guys see a bullish reaction from this low where we can imagine internal liquidity exists. I'll go ahead and I'll mark that off. We'll change this to liquidity. All right, then the market rejected a psychological level. We'll go ahead and annotate that as well. So marking this low off on the daily chart with a black horizontal ray, we can see the psychological level at 40101.10. Okay, psychological level, and then it created a new market structural swing high on the daily. So now we see a higher low on the daily going back 1, 2, 3, 4, 5, 6, 7 days worth of price action. We see internal liquidity. We see the market show us the willingness to grab liquidity from the lows, rally higher, and create a new daily structural higher high, right? So now we see a what? Swing high, pullback, swing low. Swing high, pullback, swing low. Swing high, and now we see a pullback again. All right, now we'll get into this price action. So now we have areas 1, areas 2, and areas 3 marked off on our charts. Again, this is going to full circle once I jump down to the lower time frame to really show you guys the nitty-gritty of what the market makers are doing. So now that we have a new swing high on price action, we can see here, again, just to determine what the potential trend is going to be in this area continuing the market direction. All right, we can see here that these lows, what are we going to utilize? What tool are we going to utilize? Because we see that these lows were violated. The market created a grab of liquidity or a willingness to take liquidity from this internal area, failed to break the structural low here and run higher. All right, so this is the market showing us a willingness to grab liquidity from the highs, internally printing the definition of an uptrend: higher high, higher low, higher high, higher low, higher high, higher low. So we're going to mark these areas off with our trendline tool. So taking the wick low of the daily, extending that over to the next candlestick, taking this wick low on the daily and extending that over to the next candlestick. Make sure that you guys have it synced up with the low of the wick to the T. All right, now this wick low, what did it create? It created a grab of liquidity and a market willingness to go higher, or showed us a willingness to go higher to create a new high. So what are we going to annotate with this wick low? We are going to annotate with this wick low a black line. Okay, now going over to the current daily candlestick, we have a tiny little fractal wick low right here that we can annotate as well. Again, just to get the overall directional bias of the higher time frame market. So now we have the last 7 days worth of price action marked off. Okay, and this is going to be crucial for us because these areas are going to be areas that we're going to need to see broken before we change our bias from bullish to bearish. All right, so again, you're not looking to sell the market until these daily candlestick lows are violated. The market breaks fractal structure, creates new swing lows on the daily chart, and then creates a lower high. So we'd be looking for something like this. If this is a new high that the market created, maybe we could see this as a grab of liquidity above these highs. We would then need to see a daily candlestick close beneath 1, 2, 3, or 4 of these lows on the daily chart to confirm a reversal in the market on the daily time frame, where then on the daily time frame we'd be looking for a lower high, lower low, lower high formation to potentially get in on a moving trend. I don't even know what that is. Don't need to set an alert. Let's get rid of that. Okay, so that is how we can confirm on the daily. So that is how we can confirm on the daily a reversal in the market, is by breaking previous daily candlestick. So now let's jump down to the lower time frame to show you guys again why these drawings are crucial if we want to look to trade the market over here to the right hand side. Maybe we missed all of these dip buying opportunities on Bitcoin, just as an example, and we want to get in on this uptrend over to the right hand side. So how can we utilize these drawings? Let's go down to the hourly chart and see how these drawings fixate on the lower chart with the session indicator, okay? This is extremely crucial. Now pay attention, guys. As you guys can see, the black lines, don't forget, are our daily candlestick areas of interest that we would need to break to see a market reversal. We also know that the red lines are what? Areas of internal liquidity on the daily chart that we can see the market continuously grab liquidity beneath the lows and showed us a willingness to go higher. Same thing here. We see the market grab liquidity beneath lows on the daily chart. Again, we see that the red trend line tool that we annotated on the daily candlestick, we can see how that prints on the hourly chart. We can see these two areas. Again, the market was grabbing liquidity from lows and then showing us a willingness to go higher. This is exactly the pattern that I show you guys to attack on the CYPRX YouTube. We see here a grab of liquidity, a rejection of a psychological level. We'll round this off for 0.535 point. We'll just round that off to 50. Okay, and then we see the market show us a willingness to go higher by breaking previous market structure, give a pullback where we can see New York session took a buy position from, buying at a discount from where Asia session purchased from. Funny how it all kind of links up, right? If you guys have been paying attention to this YouTube channel here, we can see that the market makers during Asia session enticed people to sell early, created a discount position for themselves, liquidated those early sell positions, then passed price action over to London and New York. New York manipulated price action to take sells, to push price into discount for buys for themselves, and then liquidated all of those early sellers, which internally, again, was what? Retail positions liquidity in the form of a double top formation or retail resistance in this area. All right, again, understanding how to properly read this market is extremely crucial. So now that we know that we're trading in tandem with the higher time frame, where we have these daily candlestick wick lows that we would need to break to determine a bearish reversal. So if we're looking to trade price action somewhere in this area over here to the right hand side, what do we now have on our charts in the form of a directional bias to determine where we're going to be looking to place trades? Well, number one, we know that we're operating at a high right now. We also know that these are areas of interest where the bank and institutions could potentially push price on the daily chart into discount to take buy positions from. So what I would be looking to do if I was actively trading Bitcoin right now, number one, because we're operating at a high, I would be looking to do what? Sit on my hands and wait to see if price can retrace into one of these daily discounted regions to look to take buy positions from. Okay, now we have to understand that the market can react to any of these discounted ranges, but we also have to understand that until the market breaks these ranges and creates lower low, lower high, lower low, lower high scenarios underneath of these ranges, the market is still in an uptrend. So what does that mean? That means until we see this type of price action where the market breaks these psychological levels and maintains price action below these psychological levels, we have to assume that what the market is currently telling us at this current given moment in time is that the market is trending up. Okay, so this is how you guys can utilize the daily time frame to synchronize the daily candlestick lows in tandem with your lower time frame chart analysis to get a directional bias. So what is all this doing for you? This is saving you from taking sell positions and assuming a trend, right? Guessing that the market is selling off and getting liquidated because you're trading in the wrong direction. As you guys can see, if you were taking sell positions based off of these impulsive moves to the downside, you would have gotten liquidated. Same thing here. If you were taking sell positions based off of these manipulation candlesticks to the downside, where we can see bearish engulfing candlesticks, look on baby pips. Okay, the definition of a bearish engulfing candlestick is, the market dumping or the market reversing or whatever the case may be. But we can see here again another liquidated sell position. Same thing here. All right, even here. Maybe you were taking an impulsive sell move off of this massive bearish candlestick. Look at this bearish candlestick manipulation move. All right, look at this manipulation. What was it? It was a move by the bank and institutions in Asia session, pushing price into discount to where New York session purchased from. All right, look at this low here where New York session purchased. What did the market makers do? Look at this accuracy of what it is that I teach you guys. Okay, we can see here prior to Asia session, right here in this area, what did the market makers create? Early buyers, early sellers. Here, here, and here. Okay, in their manipulation window. So what did they do? They manipulated price action to come and attack, sell positions. Then they pushed price action down to what? Liquidate buy positions from these lows and give themselves discount from where New York session purchased from the previous day. And then they buy again and they send price higher. It's all a manipulation move. So utilizing the tactics that I just taught you guys can orchestrate a directional bias on the higher time frame to make sure that you don't get caught on the wrong side of the market. So we know now that if we want to operate in this area, okay, of price action, we need to wait for what? A discounted pullback. Maybe if we're looking to take sell positions, we need to wait for the market to do what? Break these structural areas here, here, or here before we get a bearish confirmational close and change our mindset from a bullish market perspective to a bearish market perspective on Bitcoin. Now, this is just an example because a lot of people are looking to day trade and scalp the cryptocurrency markets, but you can utilize these same methodologies on any given currency pair, on any commodity or indice. It doesn't realistically matter. All right. So let's just say, for example, we're looking to trade GBP JPY. All right. Utilizing the same methodologies. Let me get rid of these drawings. What can we see here? All right. The past 7 days worth of price action. Okay. 1, 2, 3, 4, 5, 6, 7. We can mark off the daily lows. Here we have a daily low. Here we have a daily low. Here we have a daily low, and so on and so forth. Okay, so now that we have marked off all the daily lows, okay, what can we see? Going down to the lower time frame, now we have areas of interest that we would need to break in order to orchestrate a directional move back to the downside, where we would need to see these lows broken on the daily chart and get a confirmational close and hold beneath these levels to reverse our mindset, because we can see here the market makers have been doing what? Trending up. Higher highs, higher lows. Higher highs on the daily, liquidating internal liquidity. Here you can see that pattern that I showed you guys, grabbing liquidity from internal areas and then showing us a willingness to go higher. Same thing here, grabbing internal liquidity and then showing us a willingness to go higher. On the daily chart, we can see how these markings play out on the hourly, so that way we don't get confused. So now, just looking at GBP JPY, if we're going to want to operate in this space, we can analyze two things. Number one, that we are operating at a high. The market most likely is going to need to take a breather. Well, if we're measuring from this new swing low, or A, to the new swing high, B, and that's if the market starts to retrace from here, we need to do what? We're not going to be looking to take sell positions until what? These lows are broken, we get a confirmational close below them, and the market starts to create lower lows and lower highs beneath the daily lows. And until then, the market could respect any of these levels, give a bullish reaction to internal liquidity, and stem higher to attack liquidity in the form of sellers who don't know how to properly trade with the higher time frame direction. Okay? That would be liquidating all of their orders and activating buy stops above these highs from people that are willing to buy at higher prices. All right. Blessings to you guys all. I hope that this video breakdown helped. Again, not giving everybody the fruits and nuts that I give to the CYPRX advanced students, but I hope that this video helped you understand the directional bias of the market. Again, what you're going to be looking to do, it doesn't matter what currency pair you're trading, commodity, index, or stock. All you're going to do is go to the daily chart. You're going to orchestrate where the lows are in the market on the daily chart, and you're going to make sure that you're trading in tandem with the directional bias on the daily chart. If you see that the market is making higher highs, higher lows, higher highs, higher lows on the daily chart, where we can see none of these lows have been violated on the daily chart, then going down to the hourly, what that orchestrates to and what that displays is that the market was continuously making higher highs, pullbacks, higher lows, higher highs, pullbacks, higher lows, and so on and so forth. All right. So blessings to you guys all. Make sure that you like and subscribe to the YouTube channel. I hope that this video breakdown helped you all out, understand the higher time frame perspective price action a little bit better. Give me some comments in the description down below on any other videos surrounding technical analysis that you guys would like to see, maybe on some different currency pairs or maybe on some different cryptocurrencies. As always, be cognizant, be aware, and I'll see you guys in the next video breakdown.